Good afternoon, traders and investors. Will back here with another one. And today, guys, another red day in the markets. This is the second gap down open in a row coming off of weak Asian market sentiment leading into the morning. Now, overnight, we had a very bad night stemming from China news where they came out with their GDP, which was lower than expected, which led to a very weak overnight session. Couple that with the news that came out in the US this morning of strong retail sales data, which led to Fed rate decrease probabilities coming down in terms of the Fed may not be able to drop rates as quickly as expected because we had another bullish consumer purchase read for the month of December. So in today's video, guys, we're going to go over those two data points that came out over the course of the day. We're obviously going to go over our major indexes in terms of the technical analysis and our major tech names as well. Lastly, take a look at my portfolio. And before we do the technical analysis, I do have two earnings for you guys in the name of Charles Schwab and Interactive Brokers, which are pretty much going to wrap up the major releases here for your banking sector. We've done two consumer-facing banks last week in the form of JP Morgan and Bank of America. We did the two investment banks yesterday, Morgan Stanley and Goldman Sachs. So today I figured we should wrap up with the brokers. So without further ado, guys, let's get started with the video right away. Now, SPY down 0.56%, QQQ down the same 0.56%, but pretty much red across the board here, guys, in terms of market performance on the day. So what exactly happened here, guys? Well, very negative overnight sessions in the last 2 days to start the week. You can see here that leading into Tuesday, pretty much Tuesday night, overnight, right into the Wednesday session, very negative sentiment here as well. And if you can see here, guys, leading into this morning, too, right? We had a very negative continuation on this sentiment, which led markets to pretty much have a gap down open in relation to yesterday's trading. So all of this negativity move since last night was due to China here. Look at this headline. Hong Kong shares dropped 3.7% and mainland China stocks tumble to near 5-year lows. So once again, pressure coming out of the Chinese markets now in a bit of a deflationary cycle as their economy is slowing down. This was stemming after China came out with a GDP report saying that their GDP slowed to 5.2% year-over-year growth instead of the expected 5.3%. So it was just adding fuel to the fire of the Chinese negative headlines that have been the case here for the past month and a half. So this is the reason for the overnight drop. And then when you couple it coming into this morning here, guys, coming into this morning, really at the pretty much the open here, 9 a.m. was when we came out with your retail sales data. So take a look at this here, guys. Retail sales rose 0.6% in December, topping expectations for holiday shopping. So double-edged sword once again. It shows that the consumer is strong. However, this also leads the Fed to potentially not be able to decrease interest rates as early as March. So a bit of a double-edged sword there in terms of for your rate cut expectations. So you'll see here retail sales increased 0.6% in December, buoyed by a pickup in clothing and accessory stores, as well as online non-store businesses. Economists expected a rise of only 0.4%. So coming in a bit hot, and you had a bit of comments here, right? So here's your monthly change in US retail sales. You can see this slight little uptick in December due to the holiday period in shopping. So data showed discounts from retailers and increased motor vehicle purchases supported a higher than expected rise in US retail sales, keeping the economy on a solid footing for 2024. But that reinforced the view that the Fed may not cut rates as quickly as previously expected this year. Traders' expectations of a 25 basis point Fed rate in March, Fed rate decline in March dipped to only 55% from around 60% before the data was released here. And this is the quote of the day here, guys. People's positions are moderating from all positive to there's still a lot of uncertainty out there, said Tom Martin, senior portfolio manager at Globalt Investments in Atlanta. So that has been the thing we've been talking about here, guys, how we had a very bullish stance in November and December when the Fed was very dovish in terms of talking about rate cuts. They finally started addressing rate cuts, finally started answering questions on rate cuts, and traders were very quick to price in rate decreases for 2024. But All is not so sure now with the most recent comments by Fed members. Yesterday, we had the Fed member, Governor Waller here, speaking about how he was pleased about the decrease in inflation, but that they were going to remain data dependent and we should not get overly bullish on the speed of rate cuts, but that they could very well be coming. So you can see the Fed rate probabilities here down currently again here today, under 60% for your rate cut in March. Previously, yesterday, they were around 65%. And I'll remind you guys, on Friday, they actually hit their highest in the past month and a half of about 76%. So we've now come down a bit, especially after the comments from Governor Waller yesterday, the data that came out this morning. And also, guys, you did have the ECB comments from a lot of central bankers in Europe yesterday during the Davos meeting that were also stating that it's going to be very tough for them to bring down interest rates in Europe because of the inflationary cycle that they're in Europe, which is not coming down as fast as the US. So a lot of negative news here plaguing the market. I mean, retail sales was positive news for the economy, but negative news in terms of your probability for a rate decrease. And I'll remind you guys, the rate decreases are what the market is betting on. So obviously, when we start decreasing those probabilities, the market doesn't quite like it. And that's why you have traders really pulling back on their expectations. And we're starting to see a bit more aggressive sell-offs here. So before we get into the technical analysis here, guys, let's do a bit of earnings real quick to wrap these things up. So we're going to start it off with our stock here. First stock is going to be Charles Schwab. So Charles Schwab had a very negative day to the open. This was a stock that was on my watch list here in terms of earnings for after they report on the morning here. I was looking for the $60 range and it came right down into our sweet spot here of the expected range. Now, we were just looking for a weekly higher low, and seemingly with earnings here today, we may have just got our weekly higher low. Now, how did they do exactly? You can see that on the morning here, as soon as it was released, the stock was down almost 7% here, guys. Why was that the case? They actually had a nice little beat here on EPS. And they did have a slight little rundown on your revenue here. But all in all, it was the year-over-year comparisons that was tough to beat for Charles Schwab. I still like the stock a lot between the $60 and $50 range, however, which I've been saying for pretty much the past entire year since the banking crisis. Charles Schwab at these levels seems to be a very attractive opportunity, holding up nicely at your moving averages. Let's go over a bit of the earnings call here. So Schwab earnings beat estimates. Why is the stock dropping? Well, it was a bit of a mixed report here, guys, okay? So they reported better than expected fourth quarter earnings on Tuesday, but investors sold the company's stock as uncertainty about Schwab's future performance appeared to overshadow the earnings beat. Now, Schwab's net income fell to $1 billion from $2 billion for the same period a year earlier, and adjusting earnings fell to 68 cents from $1.07 per share last year in the same quarter. Rising interest and non-interest expenses hurt the company's bottom line. So the company's stock was battered in 2023 on concerns about outflows of money from sweep accounts at Schwab's bank and related increases in expenses. The company, in response to these increases in expenses, laid off approximately 2,000 employees as a cost-cutting measure late last year. So here's the CEO here. It was perhaps the most challenging year in my time at Schwab, said the CEO. Certainly the most challenging since the internet bubble. So he's been at the helm of Schwab for a very long time. Now, during the call, executives said that headwinds Schwab has faced are temporary and easing, but they added that the company's near-term financial performance will be shaped by factors that are difficult to predict, such as the trajectory of interest rates and client behavior. Now, these obviously are one in the same, right? And we'll take a look at that lower in the article right here. So, Schmidt rates Schwab outperform. So this is one of the analysts here. Schmidt rates Schwab outperform and says there were otherwise positive signs in the company's fourth quarter earnings report, such as increases in cash deposits and organic growth. We'll see here that they actually hit a very big record in terms of this last point right here. So, Schwab's troubles last year stemmed from rising interest rates, which prompted clients to move billions in uninvested cash. So these guys were just sitting in cash from low-paying bank sweep accounts, otherwise known as your regular checking and savings accounts, to higher-yielding options, most notably potentially money market funds or guaranteed deposit certificates here that were yielding close to 4 to 5% instead of staying in cash. Now, obviously, it's better for Schwab to for clients to remain in straight cash because they can leverage that money and convert it into high-yielding bonds for themselves. But when clients actually invest that money into short-term or long-term savings accounts, such as money market funds, obviously they lose access to leverage that money here. Though the money doesn't leave Schwab, the process known as cash sorting has put pressure on earnings because Schwab earns more on the sweep accounts than the other options. When deposit outflows have exceeded Schwab's cash on hand, it has to rely on expensive short-term borrowings to plug the gap. And I know all too well about this, guys. At my time at the bank, when I was a stockbroker and portfolio analyst, this was one thing that we were constantly looking at, is the amount of money in client sweep accounts, otherwise known as just stale cash, in relation to how much money clients were actually invested. Obviously, when rates go higher, clients tend to deploy that cash into accounts that the bank can no longer necessarily leverage as well as it can leverage straight cash that is uninvested here. So you had a net interest revenue drop to 9.4 billion from 10.7 billion. That's the amount of money that they make between the loans that are issued and the interest income that they receive. So there are signs that the cash sorting is abating, which should relieve pressure on Schwab. The company had 290 billion in bank deposits for the fourth quarter. That's down 21% from 2022, but up 2% from the third quarter of 2023 here. So once again, clients pivoting. And they also had a heck of a year in terms of corporate restructuring, right? So they did have a big merger here with TD Ameritrade, which they acquired here. You can see here the net new asset figure for December was likely a welcome sign for investors, as Schwab had suffered some customer attrition in late 2023 due to the integration of TD Ameritrade, which Schwab acquired at the end of 2020. So now that merger and acquisition is done, the clients have mostly moved over to the Schwab platform. Now that 90% of Ameritrade customers have moved to Schwab's platform, much of that attrition is likely behind the company here. But we have a very good number here, guys, right? Very good number. Look at this, guys. The company continues to rake in client money. Schwab reported 43 billion in core net new assets in December alone and 306 billion for 2023. Total client assets reached a record of 8.5 trillion, up 21% compared with 2022. So the moral of the story here, guys, is that Schwab is going through some short-term items here. They are doing a little bit of cost restructuring as well, but overall, the business is still on the right trajectory. The business is once again being bogged down slightly by higher interest rates, but this is a cyclical thing, leading investors to believe, and myself as well, that when rates do come down, this company will be back to what it does best, which is generating profit hand over fist. This is one of my favorite financials picks, not only because they're a very strong consumer retail banking entity, but also they have a very decent boost in margins coming from their trading revenue, most notably because now they are the largest broker in North America with their merger with TD Ameritrade. So this tends to very heavily boost profit margins. And you can see profit margins, even though they've come down in the most recent year because of a little bit of interest rate crunch here on their net interest received, they are still making money hand over fist from their brokerage. So I do still like the stock, and I do still like it for some good performance in 2024. Now, our second stock that we're going to cover is the other broker, my own broker, Interactive Brokers. So let's see how exactly they did. So Interactive Brokers came out with earnings here after the close yesterday, and we're down starting the morning here another, about 6-7%, just like Charles Schwab. So you can see here, guys, they started the day very much 4%, right? 4% to the downside. So I might have spoke a little bit too soon. So 4% to the downside, but was able to recover nicely intraday. So what happened exactly with their earnings? You'll see here that they missed on earnings ever so slightly. They did have a nice beat on revenue. Now, Interactive Brokers really has been a very beautiful uptrending chart. Does get kind of choppy because it is a cyclical business as well. Really all depends on their trading revenue because they don't have a consumer banking, consumer bank facing retail in terms of just everyday banking solutions, right? But they are a pure form broker, and they do make very decent profit margins, right? So a lot of their money is just going to be coming from trading fees or basically margin loans that they issue to clients. So here's what happened with them. Interactive Brokers reports solid earnings growth in Q4 2023. Very good. You'll see the numbers here. EPS increased to $1.52 from $1.30 in the year ago quarter. Very good increase year over year in terms of EPS here. We're talking about over about 15% roughly. Net revenues grew to 1.15 billion compared to 958 million in the same period of last year. So once again, over 15% revenue growth on the year. That's what you want to see. 15% EPS growth, 15% net revenue growth. Very solid numbers here, right? So income before taxes, also known as almost your bottom line here, right? After taxes would be your true bottom line, rose to 831 million from 671 million in 2022 Q4. Very good rise in net income here, right? So very good numbers as a whole here, guys. Nothing bad to say about the company specifically. IB generates trading commissions, which account for 43% of the net revenue by facilitating trades in a number of different assets, of course. And they also earn net interest income, representing about 54% of net revenue. So basically, the margin that they issue to clients and their trading revenue represents pretty much here, guys, roughly about 90%, 95% of their total revenue in terms of their ancillary services, right? So very good here, of net revenue from client idle cash and charges fees for ancillary services, contributing to about 6% of net revenue. So there's your difference right there. Despite a small negative impact from principal trading and other activities, the firm continues to derive the majority of its net revenue from the US, with international markets contributing about 30%. So Interactive Brokers, very solid stock in my opinion here, guys. No red flags in the earning call whatsoever. You can see increasing EPS over the next 4 years as well. That's exactly what you want to see, and increasing in terms of their revenue as well. Company is trading at a fairly attractive multiple as well. They're only trading at about a 15 EPS here on the current trailing 12 months. So very good. And you can see most analyst targets are currently above your expectations. Stock is in a beautiful weekly uptrend as well. Currently just set the weekly higher low with your earnings, and also looking for the monthly breakout potential as well on the way to your new all-time high. So very solid company. A bit too rich for me. I really like playing Interactive Brokers down here in the lower $80 range. And if we do, for whatever which reason, revisit this lower $80 range, that would be a good spot for me to pick up some shares. So with those earnings out of the way, and with that news out of the way here, guys, let's tackle our major indexes, shall we? So SPY, still waiting for the bulls to set a daily higher low. Very big area of consolidation. You can see price really hasn't moved around much over the past month. So we're still consolidating here, trying to regain the daily uptrend to the upside. So we'll see if bulls are able to do that. Shorter time frames here, guys, need the bulls to recapture the hourly uptrend. After such big gap down opens on the previous 2 days, right? And now it's time for the bulls to kind of muster together a little bit of a run, if they can, into the end of the week. If they're able to set the hourly trend into tomorrow, your daily higher low will set, and we'll just be looking to set that daily higher low and potentially rise towards your all-time highs, providing that no negative macro news does come out. But keep in mind, guys, tech earnings do start over the next 2 weeks. So if this index stays relatively muted during that time, don't be surprised. We're going to have a lot of volatility during the earnings season. And in my opinion, we are going to potentially wait until earnings start coming out on major tech stocks to potentially break this range hard one way or another, to the upside or to the downside. Obviously, if we fail the retest of the highs and break to the lows, that's daily downtrend set, and you're just looking for further weekly consolidation here, guys. But SPY, all in all, not looking too bad. Line in the sand remains 466.60 here, your daily higher low. Obviously, if you lose that, well, the bears will be able to set the daily downtrend in motion. Your further weekly consolidation will be underway, but bulls with still tons and tons of space. Keep an eye, guys. 460 down to 450 was the area that we're calling for big support. Now moving on to QQQ. QQQ also kind of trapped in this big range right here. So I'll remind you guys, we were looking at the size of the bounce on QQQ as well. The bounce size was very nice. Now we're looking for the bulls to set the higher low for a setup of a daily trend change here. So bulls playing some good defense on QQQ here on the day. You can see in terms of your heat map here, guys, everything was pretty much down, but QQQ putting in some good defense, right? So we really started the morning off low, coming off that gap down open. QQQ able to end the day positive, even though a lot of your big tech was down on the day here. Take a look at this heat map, guys. Very negative day for your markets overall. And in the 1 day relative, everything was pretty much down. So it's nice to see QQQ be able to recover so nicely intraday here, guys, with that move. So we're looking for the same thing. Bulls currently have set the uptrend in QQQ. In relation to SPY not quite setting the uptrend. As you can see, resistance is still up there, but QQQ, the first one to reset the daily, the hourly uptrend here. So if they continue with that hourly uptrend into tomorrow, guys, your daily bounce just continues to be underway. Your daily higher low is set, and then we're looking to crack these previous highs for 1123 for daily trend continuation. Obviously, if we lose those lower time frames, we're just in for more daily consolidation. You're looking to protect this 395.24. Need to set the daily higher low for a potential trend change continuation here. If we just lose it with earnings potentially, then we're just in for further weekly consolidation, which may bring us into 395 down to about 385, this big area of support, which is your previous 52-week resistance, right? So that is pretty much it for QQQ. Looking healthy, but bulls still with some work to do. XLF financials here, guys. You'll remember this from the thumbnail of yesterday's video. So we continue. Loss of the 12 EMA on the daily chart, right? So loss of the 12 EMA and also loss of your daily uptrend. Now bears setting the daily downtrend in motion right now. So daily downtrend is currently set. We are currently in weekly consolidation at this point here, guys. But I did remove this box right here, but I'll put it back right now with you guys currently, right? So about 37 down to about $36 range. This is going to be the area of support that we're looking for the bulls to place support. So as long as the bears control this slight daily downtrend right now, we're looking for further weekly consolidation into this zone. 37 down to $36 is the range. 12 EMA is there as well. So I do expect the bulls to be able to set a weekly higher low for potential trend continuation here. Obviously, most of your financial earnings are now behind us, so no major catalysts anymore in that respect. If you want to see the bulls put in a bit of a run here and try to counteract in terms of this daily downtrend that we've set right now, right? Watch your lower time frames, need them to recapture the hourly uptrend. After losing the hourly uptrend, need to see a new hourly uptrend form. That is when you know your daily bounce is underway. Then we're going to be looking to get as close as possible to your previous lower high, 37.99, to reset for a potential daily uptrend here. But wouldn't surprise me if your financial bears continue consolidation here after such a beautiful 10-11 week rally here. Wouldn't surprise me if we do get maybe an extra week or two of consolidation into this range. It's just giving bulls that much more gunpowder here to make some purchases down in the lower levels. Now moving on to healthcare. Healthcare also losing a bit of ground here, guys, but still playing defense at the 12 EMA. Healthcare hasn't lost the 12 EMA since the entire rally, and it's been pretty much 2.5 months of rally for healthcare, right? So daily uptrend is still in motion, but now the bears have come down significantly into your lows right here. 138.64 line in the sand. Lose that, you lose the daily uptrend, gives the bears a possibility to set the lower high and lower low. If ever we set the daily downtrend in healthcare, similar to what we've been seeing here on some of your other indexes here, just really retracing in terms of the weekly, it'll just be healthy weekly consolidation here, guys. Target the top end of your range, 136.50 all the way down to pretty much 133 is going to be the mark. Very healthy breakout retest area for your XLV bulls. XLV bulls are in full control of the long-term timeframes, but looking ever so slightly weak here on your daily timeframes as well. We're still holding the higher low pattern ever so slightly. So if the bulls are able to bounce from this 12 EMA, well, obviously we're going to need a break of a high to continue that daily uptrend here. But looking like the bears do potentially want to engulf with such a big move to the downside, could be argued that the probabilities do favor a lower high, lower low scenario, which would just be healthy weekly consolidation. Now moving on to IWM Russell. IWM Russell here doing fairly decently on the day, despite a heck of a drop in the morning here, coming right down into our support zone here. So I'll remind you, this whole 187 all the way down to 184 range is pretty much your next area of support. We're pulling into it hard, right? So daily downtrend is set by the bears right now. Weekly consolidation is fully underway, and now we've hit our weekly 12 EMA for the first time. So I remind you guys, right, we are always looking for this area right here, 188 to about 183 is going to be the sweet spot of this range. It is pretty much the midpoint of this entire range, and all of your moving averages are in here. So if we continue pulling back, I do expect the bulls to put up a heck of a fight in this range that we're pulling into, 188 down to about 182 for your weekly higher low for potential retest of this resistance zone. We're talking about 195 up to about 200, right? So need the bulls to start playing some defense right now. How will you know that your daily bounce is underway? Well, you need to see a recapture of the hourly uptrend. They started a new hourly uptrend in the day. Need to see a bit more from them, a bit more further continuation here. Then we're going to look for the size of the bounce in relation to your most recent lower high, 197.18. Get me as close as possible to there. Set up some nice probabilities for a daily trend change, but set up a low bounce before losing your hourly trend change back to the bears, and you maybe just do for further daily downtrend continuation and further weekly consolidation into the midpoint of this range. And now lastly, our Dow Jones here, guys, right? Dow Jones as well, losing your 12 EMA for the first time in the last 2.5 months. So it has to be notable to you, losing our daily uptrend as well. Cut the lows right here, 37,300. Now the daily uptrend is unfortunately lost, but it doesn't mean that there's a daily downtrend yet. Daily downtrend would be lower high, lower low. So we're going to be looking for the bulls in terms of being able to play defense in this area. Going to be looking how fast can they recapture the hourly uptrend. If we recapture it into the end of the week, we're just looking for a daily bounce to get us as high as possible to 37,835, our previous all-time high, to set up for a daily trend change here. But if your hourly bounce only lasts about a day before rolling over, very possible the bears set the daily downtrend, would just be very healthy weekly consolidation. This is still a weekly bull flag, guys, looking very good. Your area of support for your weekly consolidation, 36,900-ish, down to about 36,400-ish, which is your previous all-time highs. So Dow Jones looking healthy, even though it is consolidating a little bit, potentially setting up for the daily downtrend. On the weekly, it is just a very beautiful weekly bull flag here for consolidation. Weekly higher low for further trend continuation here into 2024. But like I said, a lot of these indexes may just stay muted until we are through our earnings season. And keep in mind, we have Jerome Powell coming up in exactly 2 weeks with your rate decision for January and with commentary on a potential rate cut in March. So that will be very big things that'll be moving the markets in the next 2 weeks. Your earnings cycle that continues through early February and Jerome Powell on January 31st. Now, moving into our major tech stocks here, guys. So Apple struggling here at the lows, right? So we were looking for potential break of the lows right here, and they didn't quite break it. Really double bottom here. 180.32 is the line in the sand. The daily bears are in full control, right? So daily downtrend, you got your daily lower high right now, and now the bulls are looking to save the lower low daily downtrend continuation. So all in all here, guys, the bulls have been putting in, it's been gap down open for the past 2 days on Apple, and the bulls have been able to fight back intraday, but still no reset of the hourly uptrend, right? So you need to reset the hourly uptrend into tomorrow if you want this daily low to be set, and looking at that point for a bounce as high as possible into our previous high, 186.83. Get me as high as possible, and you may stand a chance at resetting the daily uptrend to the upside. But if your hourly bounce is weak before rolling over, may just be due for further daily downtrend continuation, unless we just completely flush it into tomorrow, which would just be straight daily downtrend continuation, right? In terms of the weekly here, Apple is still tightening up on the weekly. We are still just looking for a potential weekly low to be set in this range right here, right? So 181 all the way down to about 175 is my sweet spot for Apple. The closer we get to 175, the more tempted I am to make some short put plays in that region. Apple, obviously, with earnings coming up here in about 2 weeks, so that will be the deciding factor, in my opinion, whether we can really reset this daily uptrend to the upside over here with beautiful earnings, or whether or not the bears have a likely weekly lower high into weekly lower low after earnings, potential for a weekly downtrend, which would just lead into monthly consolidation. But I will be shopping for Apple in the lower 170 range. That is my target for the stock. So as of now, it's up to the bulls to prove it to us that they want to reverse this short-term downside. Now moving on to AMD. AMD continues to outperform as opposed to a lot of other stocks here that were very red on the day, right, guys? I need to show you this heat map again. Everything red, except for just a few, right? AMD being one of them. So AMD continues its march towards the all-time highs. Daily uptrend is beautiful, right? After this beautiful engulfing move by the bulls here, right? Loss of the daily uptrend. Bounce was 100% of the most recent down leg. Now AMD set the daily higher low and daily trend change back to the bulls here. So AMD looking very healthy at this point. Any pullback when this move tops out, just going to be looking for a daily higher low, anything above 143.54, just for a daily higher low for further trend continuation. Weekly is looking very good as well. Weekly higher low is set. So if ever this daily move tops up near the all-time highs and we get a bit of a daily downtrend consolidation here, daily slightly overbought, that would just be very healthy weekly consolidation, anything above 134.43, just for weekly consolidation here for further trend continuation here. Monthly breakout is absolutely gorgeous by AMD, and now very close to your all-time high, guys. That is your next area of resistance, 164.50, about 2.5% away, so very healthy chart by AMD. Now moving on to Amazon. Amazon pulling back ever so slightly on the day again, but that's okay. Amazon still has a lot of space to work with here. Daily downtrend was confirmed by the bears. Bulls, 100% engulfing move, creating the space, enough for a daily higher low to recapture your daily trend to the upside here. So reacting nicely from your moving averages. We do have a nice little area of support all the way down here, 148 all the way down to about 141. If you do start breaking this level here, daily downtrend, that would just be weekly price support down here. Your 12 EMA is down here as well. It's a beautiful weekly uptrend as well on Amazon, and Amazon does have earnings here early February, so we're going to be looking from good things, good guidance from them as well as they increase profitability this year. They have lower capital expenditures in terms of they're not looking to build that many warehouses as much as they did in the past 2 years. So their guidance and their earnings should be fairly good. In terms of your daily bulls are still in control of this move right now, right? Need them to pretty much put a stop to this close, because on the fib, The bears have now recaptured almost 50% of the move. So this is make or break for the bulls. Either you start your daily bounce, which would give us the good probabilities for a daily trend change. But if the bears start taking back too much of this move, could set up for a new daily downtrend, which would just be further weekly consolidation. But I like Amazon in this area, guys. It's built a very nice area of support down there. So it's going to be tough for the bears to break. You have earnings coming up as well. So just keep a close eye on that. Amazon also looking very beautiful on the monthly chart as well. So all bulls are in control of most of your major timeframes here. Earnings will be the absolute kicker. I really like Amazon. If I can pick up more Amazon below 150, right, that would be the sweet spot for me. Now moving on to Google. Google, nice little recovery intraday here, guys, right? And Google on the day, heck of a drop early into the day here, guys. We're talking about 2.42% of the downside, but bulls really recapturing this, over the course of the day. So looking very good. Google was one that never lost your daily uptrend right here. So we were always looking for a daily higher low, anything above 136.92-ish, just looking for a daily higher low for further trend continuation. Big area of support here, guys. You have your moving averages, short-term daily moving averages, and 141 down to about 138 is going to be your area of horizontal support as well. You can see it best on the weekly. It acted as resistance for a while, so now is acting as support. Beautiful weekly uptrend as well onto the bulls. So just looking for further continuation. No red flags as of yet, just looking for trend continuation. But if ever we, for some reason, roll this over into a daily downtrend here leading into earnings, we'll be looking for our weekly line in the sand level, which is going to be around your 137 mark, is your weekly higher low. So keep an eye, guys. Earnings Monday, January 29th, going to be a very big day for Google here. And I do think Google also is set up very nicely, guys, for 2024. Google largely immune to a lot of things that have been plaguing the market as of recently. They don't really have any physical products to be delivering except for their suites of pretty much Android phones, right, that they may have to ship. But however, Google really immune to any supply chain constraints. They're very immune to interest rate cycles as well because they have a lot of cash on hand, not a lot of long-term debt, and really immune to most of the things that have been plaguing the market. So I'm expecting Google to have a very good year as well here. So Google representing a good opportunity, in my opinion. If we do fall below that 140 mark, I will be shopping more aggressively for a bit more Google stock. Your next area of resistance, guys, the all-time highs around 151. Now moving on to Meta. Meta, heck of a day of recovery as well here, guys. You can see pretty much top to bottom from the open, right? So from the open, Meta was down about 2.4%, 2.3% as well, but recovering very nicely intraday as the bulls recapturing this hourly uptrend. So recapture of the hourly uptrend means that your daily higher low is most likely set all the way down here, 359.29. That's what we were expecting, guys. After a nice, beautiful daily uptrend here, we were just expecting daily higher low for further trend continuation, reacting nicely from this daily 12 EMA. So now expecting that trend continuation to the bulls here. But if for ever which reason we continue pulling back anything above 340.5, it's just looking for a daily higher low for that daily trend continuation. Meta bulls are in full control of everything here. Weekly uptrend as well. Weekly higher low is set, and we're on to further trend continuation. Monthly is looking beautiful for Meta as well. Your next area of resistance, 384 all-time highs. So until the bulls roll over this daily trend for some reason, right, we won't be looking for weekly consolidation. Need to see the rollover of the daily trend into a daily downtrend to be into weekly consolidation. Then you'll be looking for down here 339.65. So bulls still with a lot of space to work with. Meta looking very good as well. Keep an eye, earnings in the next 2 weeks too. Now, Microsoft looking very good as well here. After your break of your tightening range, daily uptrend confirmed. We were always looking for, as soon as this move tops out right here, looking for the daily higher low, anything above 366.43, just looking for a daily higher low for further trend continuation. Now keep an eye, guys, on the top end of this range in your 12 EMA, right? 381, 380-ish range is going to be the likely area that Microsoft can pull back into. It's our previous area of all-time high resistance too. Top end of the range, 12 EMA. So you have a lot of confluence in this little pocket right here. That's where I'm expecting Microsoft to pull back into before a attempt here at your daily trend continuation to the bulls. So Microsoft looking very healthy. Tons of space for the bulls to work with right now. Weekly breakout is confirmed right now. Weekly uptrend, so everything's looking very healthy as well. Not losing this weekly until your daily downtrend is set. So weekly uptrend is still just in motion right now, and the monthly is looking extremely good for Microsoft as well into 2024. No red flags for the company. Earnings coming up also in the next 2 weeks. So all of your big tech here, guys, in the next 2 weeks should be very interesting to see how they play it. Excuse me. Now moving on to Netflix. Now, Moving on to Netflix here, guys, right? Netflix pulling back ever so slightly into our moving average zone and into our previous chop zone that Netflix is really struggling with this 480 area, right? So after having lost the daily uptrend, the bulls putting in a 100% engulfing move. We're looking for a daily higher low. Anything above 463, just looking for a daily higher low for potential trend continuation. But now the bears are taking back a lot of the move. You can see this right here. They've taken back 61% of the move here. So possible that Netflix sets the lower high for potential lower low into daily downtrend continuation. But they have earnings, guys, next Tuesday. So not a lot of trading sessions before Netflix has their earnings. In my opinion, earnings is going to send them either way. We're either going to continue this daily uptrend with a big break after earnings to the upside, or the bears will be able to roll over here, set the daily downtrend into further weekly consolidation. If for every which reason we get the bear case, guys, not too big of a deal here. We are still in a weekly uptrend here. If we flush our lows right here, guys, big area of support. We're talking 450 down to about 425 is going to be the area for Netflix. And if Netflix dips into this area after earnings, I will be looking to potentially pick up some shares of Netflix because we are just looking for a monthly higher low. This is the perfect zone to set that monthly higher low, in my opinion. So price action going to be very difficult until earnings. I don't think we're going to get a break of either your high or your low much before earnings are in play. So just keep that in mind. Now moving on to NVIDIA. NVIDIA continues to really, surprise everyone, right? So down about 0.58% on the day, but beautiful recovery, right? They had a very big negative open on the day here, almost down 3.5% before recovering beautifully about 3% intraday here. So NVIDIA, the march just continues at this point. Still no daily consolidation, but NVIDIA with tons and tons of space here, guys, right? So daily uptrend is now going to be most likely set by the bulls, just looking for a daily higher low. Anything above 474 is just going to be looking for a daily higher low for potential further trend continuation here. Everything's looking very good. First line of defense is going to be this 12 EMA at roughly about 531 for any pullback here. As long as we're not losing this hourly uptrend, right? Very tough to say that the daily move up is done. If we do lose the hourly uptrend here, well, that is when your daily consolidation is started. Then we're just looking for a daily higher low. NVIDIA on the weekly is looking absolutely gorgeous after breaking out of this tightening range right here. Bull flag on the weekly. Weekly new uptrend is set in motion here, guys. So with such a high move off the all-time highs, when you do get potential daily consolidation, when this move tops out, it will be weekly consolidation as well. Anything above 476, just looking for a weekly higher low. Really the same spot, right? Your 476, this same level right here, 474, 476 area is going to be the daily and weekly higher low at the same time. NVIDIA, no red flags whatsoever. Monthly uptrend breakout too. So NVIDIA, one of your lead bulls, just continuing to march forward here. Watch the lower time frames. That's when you'll know daily consolidation is underway. Daily RSI, a little overbought, but it is NVIDIA. It can stay overbought for quite some time and continue mounting the levels. Now moving on to our three last ones here. Tesla really not performing too well here, guys. Tesla once again getting downgraded today on the day, and they did have some slightly negative news on the day as well in terms of price decreases. So Tesla slashes Model Y prices in Europe after China price cuts. So we covered these China price cuts at the end of last week. They're having an ongoing EV price war in China, most notably with their biggest competitor, BYD. But now, after not only having the China price cut news last week, we had the Berlin factory shutdown coming with news over the past 2 days because of the Red Sea implications here in terms of them not being able to get parts quick enough to their Berlin factory. So they're shutting it down here towards the end of the month for about 2 weeks. Now, another piece of negative news, they slashed the Model Y prices in Germany too. So Tesla reduces prices in Germany for its Model Y long range and the performance by 5,000 euros to about just under 50,000 euros here and 55,900, a discount of 9% and 8.1% compared to the previous prices here. So very negative news here, guys, right? So once again, Tesla getting hit in the margins by having to decrease prices to really keep those deliveries streamlined. They do not want to sit on inventory. They really want to maintain a ratio of 1-to-1, meaning one car produced, one car delivered. And to do that, they're having to continuously decrease prices here because of rising interest rates, where because of rising interest rates, demand has slightly faltered. So in response to that, Tesla, having decent vehicle margin, is able to decrease prices, but it is going to hurt them in their margin. And that's why they did benefit, or rather had a little drawback here of further 2 analyst downgrades today in terms of the stock price here. So in terms of the technicals here, daily downtrend simply continues on Tesla. If you want to know when this daily leg leg down is stopped. Just keep an eye on your hourly trend change. Still no hourly trend change to the bulls. So as soon as you get your hourly trend change here to the bulls, you'll know that your daily bounce is underway. Then we're going to measure the size of the bounce in relation to our most recent lower high, 241.55. Need to get as high if you want to confirm the probabilities for a daily trend change to be more than likely. The bulls need to recapture up to the 618 level, which is about your 230. So we need to see a bounce at least to about 230, give the bulls the best chance to recapture that daily uptrend. But for now, still bears in short-term control here until we see that 1 hour time frame reversal here. This daily move down is just continuing into the lower areas of support right down here. 210 down to about 200 is your next area of support. Obviously earnings here coming out next Wednesday here, guys. So like I said, same thing for Netflix here. Tesla, in my opinion, will not break the lower end of this range until earnings. If earnings is bad and guidance is bad, expect a potential break of your 200 zone. At that point, guys, we'll be retargeting really your 190 to about 180 zone. Really big chop zone down there in the lower levels here. And if earnings are positive to the upside, of course, that is when you could get a bounce significant enough to set up for a potential daily trend change. So not much is going to be happening before earnings, in my opinion. I am personally waiting on the sidelines until earnings. If we do come down here, guys, lower than 200, guys, 190 to about 180 is going to be the next area that I will be shopping for Tesla. Personally, just in terms of for some long-term exposure, I do believe that also we should be able to get a fairly decent bounce, but just keep in mind, guys, Tesla has been in this descending channel here for a number of months here, pretty much all the way since July. So keep in mind the lower end of that range right here is about the 180 mark, and that does come in with some larger support areas, guys, all the way down here, right? Your 180 chop zone. So just keep that in mind for Tesla. Now, lastly, Palantir and PayPal. So Palantir, guys, you know, Palantir down another 1% here, guys. So we're looking for the size of the bounce. The size of the bounce was fairly decent by the bulls here. We were talking about a 618 bounce. So it gave the bulls a chance, not a confirmed probability, but a chance to set up for a daily trend change. So now the bulls are trying to set the daily higher low. How do you know the daily higher low is set? Need to see a change of the 1 hour time frame to the bulls. So the bulls are trying to set up for that 1 hour time frame here, right? You can see after this big chop zone right here, the bulls are trying to put together an hourly trend change. We'll see if they can maintain that. If they do, that is when you will get your daily bounce underway. Then we're going to be looking to take out 1706. Take out 1706. Daily uptrend is set by the bulls, and you will have your weekly low confirmed here at your most recent low, 1580 the other week. So Palantir obviously in a weekly downtrend. We're looking, if we are able to set a daily uptrend on the weekly, guys, we'll be looking to just recapture as much as possible towards 1856. Get me as close as possible. 1856 could be setting up for a weekly trend change reversal as well, but need to confirm the daily first. Palantir with earnings early February as well. So we'll be curious to see if they remain on their positive EPS trajectory. EPS margin and client onboarding will be the main features here for Palantir. So Palantir really needs to get it done here for the daily trend change. But if we just continue to roll over here, guys, your 1550 all the way down to 14 is the massive area of support. The lower we get into this area, guys, I will be dollar cost averaging some shares of Palantir down here. And lastly, PayPal. PayPal, a bright spot amidst all of the red here, guys. So PayPal, take a look at this morning open. Gap down open, came all the way down 3.23%, all the way down to 56.57, cutting our low of about 56.40. This was the line in the sand level that I told you guys we could not lose, or we risk losing into a daily downtrend once again on PayPal. But PayPal, heck of a intraday recovery here, bottom to top, almost 6%. That's a big day for PayPal. PayPal doesn't usually move that much in terms of the volatility, right? So very nice to see the bulls recover in such a beautiful fashion. The lower time frames have now been recaptured. Your hourly uptrend is set, gaining a little bit in the after hours as well. So we'll see, guys. Can they recapture? Can they recapture this daily uptrend? Well, we're going to need a break, guys, of $62. $62 is going to be a very crucial level. If we can recapture that, since there's no close below at this point, bears unable to set the daily downtrend in motion, going to be looking for a daily uptrend reversion here by PayPal. But once again, if for some reason this move just, weakens out and over the next few days we just continue to trend lower, well, the daily downtrend will be set, and we'll just be looking for further weekly consolidation here. Keep in mind, the weekly higher low, guys, was just broken right here, right? So we had a nice weekly uptrend going. The weekly higher low was set. And now the bears actually crushed it here by a couple of dollars, right? So we'll see how this week ends on Friday. but still possible that this is just one big weekly move down, right? Anything pretty much at this point above your 54.26 can be interpreted here as a weekly higher low for further trend continuation, as long as the week doesn't close down below here. Can't be confirmed weekly downtrend just yet. So still optimistic about PayPal. PayPal, really the level they need to break here, guys, for a confirmed breakout to be happening is this around $65 range. This will be pretty much a break here of your descending channel that's been plaguing PayPal pretty much for the last year and a half. So a break of this would be very, very big, in my opinion, on PayPal in terms of a technical breakout. Just keep an eye on that here, guys. PayPal bulls holding up just fine. At this point, need to see a break of $62 to really regain full short-term momentum for your bulls. That's pretty much everything I had for you guys in terms of your stock analysis. Now let's take a very quick look into my portfolio. Not much has changed at all. So guys, taking a look at my portfolio, you will see to start off the year, very rough start to the year indeed here. We are down 14.4%. So after a very big withdrawal earlier on in the year, we maintained the same amount of positions. So a bit of a double negative here. We have less cash value in the account. We've maintained the same exposure, meaning that we're running a little bit of leverage, a little bit of margin right now to maintain those same positions here, which is why we have some very, very big drawdowns currently. That's factor number one. Factor number two is I'm very exposed right now. Most of my positions are either sensitive to China, interest rates, or both. So we'll take a look at the performance of those positions starting at the beginning of the year, but always transparent with you guys. I show you guys the good, the bad after having a very, very beautiful one-year performance in terms of the last year, right? We ended the portfolio here at about 75%, ending the year last year. And now we're starting off the year very, very red indeed. So I do still believe we'll be able to recover this, but may take a little bit more time here for our cyclical sensitive stocks, China, interest rates to make their way back. But I am happy with their the cost that I have on those. So taking a look at the portfolio here, you'll see we only have one covered call ongoing. This one is for CP. So we'll see if we get called away on that. CP currently trading down here. Let me move myself over here. Currently trading for about 76.50. Our average cost on CP right now is currently roughly about 70.3. So still a decent amount of cushion on CP right now. Just looking to really build the premium into this position here right now. They've been trapped in a range for a better part of the last 2 years. Nice accumulation. And the company's a monopoly, guys. They control most of your North American freight traffic here on railroads, them and Union Pacific. So really big monopoly here. Decent level, decent valuation. I like the stock at these prices. So I'll just continue to potentially write some premium against them. Really happy with my average cost at the lower end of this whole range right here. Now, our second position here, guys, Adobe, Amazon, swing trades, guys, that haven't really lifted off. So Adobe, I picked that up after their earnings here, was expecting them to go a little bit higher in terms of their recovery after earnings. So I may just be cutting that swing position, trying to free up a little bit of capital here. You see, I took them after earnings all the way down here. And I was expecting a real nice pop back into about the 620 range, but haven't gotten it so far. So we'll be potentially looking to take some profits on the next crack of 600. Just going to be looking to free up some capital. Would rather roll Adobe, Amazon, and Oracle potentially as well into just one big contract here, maybe into Amazon or Google. So that's it for those swing trades here. Oracle, same thing, took them after a swing trade after their earnings right here. And just hasn't recovered as much as I would have thought, right? So we did take a position here in the after hours. Oracle obviously opened the next day a lot lower, next to the $100 mark. We have collected a dividend and have collected a bit of put premium that we wrote against it here. So our average cost on Oracle, this is not the true average cost. It is about down to 106. So we are currently in profit right now, but just hasn't had the amount of lift I thought we were going to get. I thought we would make it at least back to about 110, but haven't got there yet. So after sitting in the stock here since pretty much early December, it's now been a month without much ROI to show for it. It may just be time to close the position, move on to some cash secured puts, get back into the strategy. ETH and Bitcoin still just rolling those. They're very just entry positions here, right? So decent little profit accumulated on them, but we'll be looking to build a bigger position should they drop. Now, BABA. So BABA is our first exposure here, China stock, right? So BABA down to about $68 from our assigned cost of 82. So you'll see BABA, I have been able to write some premium here in the early weeks since being assigned here back in November, right? So our average cost is down to $79.85. But you'll see heck of a drop here in the early year. So take a look at all the stocks that I own, guys. Beginning of the year, not favorable. BABA down at the low of the day here today, 13.5%. We were getting close to covered call territory, and unfortunately, this stock just unraveled here. So BABA not quite close to my average in target. Usually, I only average downs on stocks when I'm 20% or lower from my assigned price. That would be about $64, $65. So still not low enough yet for me to be averaging into BABA. So have to be a bit careful, guys, since we are assigned a number of positions. I usually only like being assigned between 5 to 8 positions. We are currently at that maximum right now. So I need to be very careful if I am choosing to average into new positions or open new contracts as a whole. Going to be very picky. So even though I had that video on Tuesday presenting a number of opportunities that came up during the week, and they did on Tuesday morning and even yesterday, a lot of opportunities, but I'm being very, very selective in the ones that I currently do. Moving on to CP, we talked about it. Nike and Starbucks, right? So even Nike and Starbucks, take a look at Nike, right? Nike, we got assigned at 112, not able to write any covered calls ever since then. Hasn't been close enough. And you can see since the beginning of the year here, guys, right? Beginning of the year, we've only been down on Nike, about 8.5% down. So my average on Nike, average down for Nike will be in this lower range right here. If we get down to about $90, that'll be 20% from my cost. I will be looking at average around $90, but I like the price that I am in on Nike. If we get down to about $90, our average cost becomes $100, becomes even juicier. So that's pretty much it for Nike. In terms of Starbucks, Starbucks down as well, got assigned at 97, now trading about at $92. So haven't been able to write any covered calls on Starbucks as of recently, hasn't been close enough. Average cost $96.52. So you can see even that from the beginning of the year, we're down pretty much 5% on Starbucks. Starbucks coming up on an area of support right here, 91 to about $88, but still not low enough for an average down for me. My average down on Starbucks would have to be as low pretty much as about $78, $77. I don't think it'll get that low. Just looking for a little bounce off this area before being able to write some covered calls in the mid 90 range. Now moving on to Trade Desk. Trade Desk as well. Trade Desk coming down a lot since being assigned here. So Trade Desk coming down significantly here. I was trying to make a play here on the bulls bounce for the weekly higher low here, but bulls struggling to get it done here. So it will look like we're retesting the lower end of this range. It's good that it's a big support area in the past, right? This whole 58 all the way up to $62 range. 200 weekly moving average is there as well. So we'll see if we can get Trade Desk to have a little bit of a bounce here. Need to see the daily bulls start recapturing these time frames as well. But as a whole, guys, since the beginning of the year, Trade Desk as well, right? Take a look at Trade Desk from the beginning of the year here, down almost 17% from the beginning of the year pretty much. So very, very hefty drop. I like the level I have on Trade Desk, but the average in for me in terms of another short put contract would only come at about $57, $56. So being very patient on that. Either we're going to be able to write a little bit of an average down right here, or we need to wait for the stock to recover to write covered calls. I like the stock price anyways. Palantir, same principle, right? Palantir average down would come at about $14.50 for me. Only have 200 shares, got assigned at 18. Palantir we covered on the channel, right? In the process of recovering currently. So we'll see if we can get some premium into next week if they bounce into the $17 area here, maybe right around the 18s. PayPal, been in that for a while. No need to discuss that any further. Need to get closer to my average cost, 66 to pretty much be able to write covered calls. And CSIQ, guys, our loss leader on the portfolio right now, CSIQ, right? Look at CSIQ down from the beginning of the year, a whopping 23%, right? So interest rate sensitive play there again. So once again, CSIQ coming down, retesting our previous areas of lows, 19 to about $20 range. It's been a big area of chop zone in the past years as well. 2020 all the way back to about 2018 here, that $18, $20 level. So we'll see. Can CSIQ come back? In my opinion, guys, solar is only going to get a comeback in about the mid to late year over the course of the year. So I'm very happy with the level that I have on CSIQ. I do like the company. It's just out of favor in terms of being a cyclical business with rates. So we'll continue to manage the position here, guys. Any little pop back into the mid $20, $23, $24 range. I may even look to write some covered calls, $24, $25, because I do believe that the stock is going to be fairly muted. I'm not expecting some tremendous rallies here, which will make my covered calls go underwater here just yet. So I may just be looking to play the mid $20 range. Just continue to farm premium, continue to slowly bring this average cost down. But when we do get that first rate decrease here, guys, and solar comes back into play, I will be looking to ride this fairly decently to the upside back into the roughly $30, $35 range here, which should give us a very nice profit after that. You know, we're talking about 30% profit, you know, $7, $8 per share and about 400 shares should be a decent profit, all things considered. And my Canadian banking shares, once again, Canadian banking shares, they used to be at the start of the year, they were about $1 higher than they are right now. Keep in mind, I do have 1,000 shares, so that's about $1,000 loss there on that position as well since the beginning of the year. Really pulling back with this most recent surge in yields, right? So banks kind of taking it on the chin. That one down about 5% since the beginning of the year, really coming back towards my cost basis, but very, very happy happy with my position in this as well. You know, looking for, we're currently still at about, you know, a couple of year lows right now. Looking to average in this position, plays a great dividend in terms of monthly yield, about 7.6%. So really like that too. So everything, guys, I really like all the positions in my portfolio. Just have not been fortunate with the way this year has started, with the turmoil in China and with your interest rates coming back in terms of people pulling back on expectations from rate cuts in March. That is what's been hitting my portfolio, guys. So figured I should be transparent with you, right? As we always do on the channel, good or bad. The goal is to stay transparent and show you guys all my trades. So all these trades, guys, are pretty much still the same ones from last year. Haven't taken many new trades this year. Need to be very, very prudent and selective on the trades that I take until we're able to get out of a few of these positions and replace them with new ones, right? So that is the moral of the story. So hope you guys enjoyed the video. If you did, consider dropping a like. Would really appreciate it for the algorithm, helps out the channel. And as always, guys, consider subscribing here if you're new. We'd love to have you. We do these videos pretty much every day after the market close to do a recap and always show my portfolio as well as the trades I'm taking. So we will see you guys tomorrow after the close. Tomorrow, keep an eye on TSM earnings before the open. If they drop considerably, guys, may just be looking to play some short puts, guys. I would love these in the mid to lower $90 range. If ever earnings is a disaster, which I'm not expecting tomorrow, but if ever we come down, guys, $90, great area for me to be writing some short puts. And that is a company that I wouldn't mind because we don't have any semiconductor exposure as of currently in the trading account. So we'll see you guys tomorrow after the close. Take care and happy trading. Peace.